The 14th of February 2025, Valentine's Day. While you were buying flowers, 4 major South Korean banks simultaneously stopped selling silver. Not reduced limits, not higher premiums, but complete suspension indefinitely. On the same day, China's banking regulators reclassified precious metals as high-risk assets. Citizens can no longer purchase gold or silver through traditional banking channels. Blocked and gone overnight. 3 days later, India's largest bullion dealers report government inquiries into large silver purchases. Not arrests, not seizures yet. Just questions, just records, just the beginning. This is not coincidence. This is coordination. And if you think this is about protecting consumers or managing risk, you have not been paying attention to what governments do when they are terrified. In the next 18 minutes, I'm going to show you the 5-stage playbook governments use to cut off public access to strategic assets. It has happened with gold in 1933. It happened with foreign currency in the 1,970 seconds. It happened with capital itself in Cyprus, Greece, and Argentina. And now it is happening with silver. The difference this time is that they are doing it quietly. No executive orders, no dramatic announcements, just regulations, restrictions, and institutional pressure that slowly choke off your ability to buy physical metal. By the end of this analysis, you will understand exactly which stage we are in, why they are doing this now, and the narrow window you have left before physical silver becomes effectively unavailable to ordinary citizens. Because here is what nobody is telling you. When governments start restricting access to an asset, it is not because that asset is worthless. It is because they know what is coming, and they are making sure you do not get positioned before it happens. Let me show you the playbook. Stage 1, surveillance and classification. This is where governments start tracking who is buying what. There are no restrictions yet and no bans. Just data collection, new reporting requirements, risk classifications, know your customer protocols, and it always starts the same way, under the banner of protecting consumers, fighting money laundering, preventing fraud. United States, 2024. The IRS expanded Form 8,300 requirements for precious metals dealers. Any cash transaction over $10,000 must be reported with full customer identification. Not just name, but social security number, address, occupation, and the entire financial profile. They frame it as tax compliance, but here is what it really does. It creates a database, a registry of who owns what. And registries have one historical purpose: confiscation. European Union, late 2024. New anti-money laundering directives required bullion dealers to report suspicious transactions. What is suspicious? They do not define it clearly. Large purchases, frequent purchases, purchases by customers who fit certain profiles. The vagueness is intentional. It gives regulators discretion, and discretion means control. Canada implemented similar measures. Australia updated their reporting thresholds. New Zealand, Singapore, Switzerland, every major financial center simultaneously tightening documentation requirements for precious metals. You think that is organic? You think dozens of countries independently decided in the same 18-month period that silver buyers needed more scrutiny? This is stage 1. They are building the infrastructure, identifying holders, tracking flows, and once they know who has metal and where it is stored, stage 2 becomes effortless. China went furthest to fastest. By late 2024, all precious metal purchases through banks required biometric identification, real-time transaction reporting to central authorities, and waiting periods for large orders. They called it consumer protection. What it really did was create a perfect surveillance system. They know exactly who bought what, when, and how much. And that data sits in government servers, ready to be used. Here is why this matters. In 1933, when Roosevelt confiscated gold, he knew where it was. Banks held it, vaults stored it, citizens kept it in safety deposit boxes at institutions the government controlled. The confiscation succeeded because ownership was documented and centralized. Today, governments are rebuilding that infrastructure, not for gold, but for silver. Stage 2, risk warnings and institutional pressure. This is the phase where governments do not ban anything outright. Instead, they simply make it financially painful and socially suspicious to buy physical silver. Bank policy changes occur alongside regulatory guidance and public warnings about volatility and risk. And suddenly, major financial institutions start treating precious metals buyers like potential criminals. Let me show you exactly how this mechanism works. Back in 2022, multiple European banks sent letters to their customers. These were not personalized messages, but mass notifications informing them that precious metals would no longer be available for purchase through bank investment accounts. There was no explanation given and no alternatives offered. Just a cold notification that the service was discontinued. If you want silver, you must go somewhere else. Somewhere we are not responsible for, and somewhere we do not have to defend. Major Canadian banks reclassified precious metals from investment-grade assets to speculative commodities. What does that change? It changes everything. Investment-grade assets get preferential treatment in portfolios, including lower fees and easier financing. Speculative commodities face higher fees, restricted allocations, and critically, exclusion from retirement accounts and tax-advantaged structures. South Korea went nuclear. 4 banks, all within hours of each other, suspended silver sales indefinitely. These were not small regional banks. These were giants, like KB Bank, Shinhan, Woori, and Industrial Bank of Korea. Institutions handling trillions in assets with global networks and unlimited access to supply. If they cannot source silver, or more accurately, if they are being told not to source silver, what does that signal to you? United States banks did not suspend sales yet. Instead, they did something more subtle. They raised premiums, increased minimum purchase amounts, and eliminated silver from wealth management offerings. JP Morgan stopped accepting silver for collateral in lending arrangements. Bank of America restricted silver purchases to accredited investors only. It is not banned technically. It is just gate-kept. Only the wealthy can access it now, while the middle class is priced out, regulated out, and quietly excluded. And then there are the public warnings. Central banks of various countries issued advisories about precious metals volatility. They called it risky, speculative, and inappropriate for retail investors. The Bank for International Settlements published a paper questioning the viability of precious metals in modern portfolios. Why now? Why are there simultaneous warnings from institutions that ignored precious metals for decades? It is because they are preparing the narrative. When Stage 3 activates and when restrictions become explicit, they will point back to these warnings. They will say, we told you it was risky, we told you it was speculative, and we were protecting you. The public will accept the crackdown because the groundwork was laid months earlier. This is Stage 2, institutional pressure and social conditioning, making it difficult without making it illegal. And it is happening right now across the developed world. Stage 3, capital controls and purchase limits. This is where restrictions become explicit, no more subtle pressure, actual limits, caps on purchases, documentation requirements that make buying painful, waiting periods that delay delivery, and always framed as temporary measures for your protection. China arrived here first in 2025. Citizens can no longer buy precious metals through banks, blocked completely. They must use specialized dealers with government licenses, and those dealers are subject to transaction limits. Maximum 10 kilograms of silver per person per year, that is 320 ounces. At current consumption rates, that is nothing. But it is not about consumption, it is about accumulation. They are preventing citizens from building significant positions. India implemented a different control. There are no purchase limits, but documentation requirements became absurd. PAN card verification, bank statements proving source of funds, tax clearance certificates for purchases above certain thresholds. They did not ban buying. They made it so bureaucratically painful that most people gave up. And here is the sophisticated part. The limits are not uniform. They are graduated. Small purchases are easy. Large purchases are restricted. Why? Because small buyers are not a threat. They are buying jewelry, small coins, or hobbyist amounts. The system can absorb that. But someone trying to convert significant wealth into physical silver, that is a problem. That is capital flight. That is rejection of the monetary system, and that gets blocked. European Union discussions in early 2025 centered around harmonized precious metals limits. Not implemented yet, but proposed. Maximum purchases per citizen per quarter, exemptions for industrial users, reporting requirements for intercountry transfers. The infrastructure is being built, the legal framework is being prepared, and once it is in place, activation is one regulation away. Argentina provides the clearest historical example. 2001 economic crisis. Capital controls implemented overnight. Citizens limited to $1,000 per month in bank withdrawals. Foreign currency purchases restricted and precious metals effectively banned for retail buyers. The wealthy had already moved assets offshore. The middle class got trapped. Their savings locked in banks denominated in pesos that devalued 75% in months. The ones who owned physical gold and silver before the controls, they survived. Everyone else got destroyed. Greece, 2015 bank runs, capital controls, $60 per day withdrawal limits. Physical gold and silver became the only liquid store of value that was trapped in the banking system. But by then, premiums were 50% over spot, dealers were sold out, and most people had missed the window. Cyprus, 2013 bail-ins. Accounts over $100,000 got raided to recapitalize banks overnight. Wealth confiscated. The people holding physical assets outside the banking system, untouched. The people who trusted the system, destroyed. This is stage 3, explicit controls, limited access, and we are watching it activate in real time. China completed it, India halfway through, Europe preparing the framework. In the United States, we are in stage 2, heading rapidly toward 3. Stage 4, dealer restrictions and supply chain choke points. This is the phase where governments do not restrict buyers directly. Instead, they strangle the supply chain. They make it impossible for dealers to operate efficiently. They choke off imports, they delay shipments, and they create regulatory nightmares that shut down distribution without technically banning anything. Let me show you how this plays out in the real world. Bullion dealers operate on extremely thin margins. They need robust bank relationships to process transactions. They need customs clearance to import metal. And they need regulatory licenses to operate. And governments control every single aspect of that infrastructure. Multiple bullion dealers in Australia reported sudden bank account closures. Not for violations, not for fraud, just risk management decisions by banks acting under regulatory pressure. No bank account means no business. You cannot process customer payments. You cannot pay suppliers. You are done. And starting a new relationship is nearly impossible because when one bank closes you for risk, others follow using shared blacklists and industry pressure. United States dealers face similar issues. Payment processors started declining precious metals transactions. Not because they were illegal, just because they were against their updated terms of service. Stripe stopped processing for bullion sites. PayPal restricted accounts. Even Visa and MasterCard flagged precious metals purchases for additional scrutiny. They are not banning transactions. They are making them painful with declined cards, frozen accounts, fraud alerts, and death by 1,000 cuts. Import restrictions came next. Mexico, the world's largest silver producer, implemented export quotas in late 2024, not a full ban, just quotas. Limited monthly tonnage for commercial exports with priority given to domestic industrial users. What is left over? Foreign buyers fight for scraps, and prices rise because supply is artificially constrained. Peru tightened mining regulations requiring environmental reviews and community consultations. That sounds responsible, except processing times went from 6 months to 18 months. Projects delayed, production slowed, and supply constrained. And this happened at the exact moment global demand surged. Russia banned precious metals exports to sanctioning countries. A complete ban. If you are in the United States, Europe, or allied nations, you are not getting Russian silver. And Russia produces 10% of global supply. That is 100 million ounces annually that just vanished from accessible markets. Here is what this creates. A two-tier system. Industrial users, defense contractors, and government-approved buyers get priority access. They get allocations, and they get supply. Retail buyers and retail investors are fighting for whatever is left. And what is left is shrinking daily. Dealers are caught in the middle. They want to serve customers, but they cannot. If banks will not process payments, if suppliers will not ship, and if customs delays every shipment for months, inventory dries up, wait times extend, premiums spike, and eventually they just stop taking orders. Not because they want to, but because the system made it impossible to operate. This is stage 4, supply chain strangulation. And pieces are already active. We are watching dealers struggle. We are watching import flows decline. And we are watching premiums rise. The infrastructure is being choked. And when stage 5 activates, when demand surges, there will be no supply to meet it. Stage 5, emergency measures and nationalization. This is endgame. This is where governments stop pretending. Asset freezes, mandatory sales, price controls, export bans, and in extreme cases, nationalization of private holdings. It sounds impossible. It sounds like conspiracy theory. Except it has happened repeatedly throughout history, and the legal framework to do it exists right now. Executive Order 6102, the 5th of April 1933. Franklin Roosevelt signs an order requiring all U.S. citizens to surrender gold coins, gold bullion, and gold certificates to the Federal Reserve. Not a request, a mandate. Failure to comply. $10,000 fine, 10 years in prison. And people complied. They handed over gold bought at $20.60 per ounce. Then, immediately after collection, the government revalued gold to $35. They confiscated at one price and revalued higher. Instant wealth transfer from citizens to the state. Why did it work? Because ownership was documented, because gold was stored in banks, because the infrastructure of control already existed. The confiscation was just the final stage. That law still exists. It has never been repealed. It was modified, not eliminated. The Gold Reserve Act of 1934 gave the president permanent authority to regulate gold ownership during national emergencies. And silver? The Silver Purchase Act of 1934 gave similar powers. The legal mechanism for confiscation is sitting there dormant, waiting for the right crisis to activate it. But modern governments learned from 1933. Outright confiscation creates backlash. Better to strangle access quietly, better to implement controls gradually. Better to make it impossible to buy before you have to force people to sell. Venezuela provides the recent playbook. 2016. Government mandates all gold mining proceeds be sold to the central bank at official rates, not market rates. Official rates set by the government at 40% below global prices. Comply or lose your mining license. Resistors got arrested for economic crimes. The state accumulated gold at artificially low prices while citizens were blocked from buying. Turkey, 2021. Government implemented a withholding tax on precious metals trades, 8.2%. Does not sound like much, but on large transactions it adds up. More importantly, it tracks every transaction, every buyer, every seller, building the registry for when controls tighten further. And here's what happens in the final phase. A major crisis hits. Currency collapse, banking panic, sovereign debt crisis. And governments need hard assets fast. They need credibility. They need something real to back worthless paper. So they invoke emergency powers. They point to the surveillance infrastructure built in Stage 1. They point to the warnings issued in Stage 2. They use the purchase limits from Stage 3 and the dealer restrictions from Stage 4. And they implement mandatory exchange programs. Turn in your silver, get currency in return at official rates, rates they set, rates well below market. Refuse? Your metal gets classified as hoarded strategic resources subject to seizure. You become a criminal for holding property you legally purchased. And the public supports it because they have been conditioned for months that precious metals are risky, speculative, inappropriate for retail ownership. This is Stage 5. And every piece of the legal framework exists right now. The tracking systems, the regulatory authority, the emergency powers, all in place, all waiting. Why they are doing this now? You need to understand the timing. Why silver? Why now? What changed? 3 forces converged. First, the industrial demand explosion. Solar panels, electric vehicles, 5G infrastructure, AI data centers. Every trend defining the next decade increases silver demand exponentially. By 2030, industrial consumption alone will exceed total global production. That is not forecast, that is mandate. Laws requiring energy transition, subsidies pushing electrification, policies that guarantee demand growth. Second, monetary system instability. $33 trillion US debt, negative real interest rates, central banks printing trillions, every fiat currency debasing simultaneously. And in that environment, hard assets become refuge. Gold already ran. It is $2,000 plus, out of reach for most. Silver, still affordable, still accessible, still the working man's monetary hedge. And that terrifies governments, because capital flight to silver is a vote of no confidence in currency. Third, the supply crisis. No new mines, declining grades, recycling insufficient. And 70% of silver is a byproduct. You cannot mine more silver independently. You need base metals production to increase, but base metal prices are weak. CAPEX is at multi-decade lows, no new supply coming for years. The deficit is structural, permanent, and growing. These 3 forces create an impossible situation for governments. They need silver for industrial policy. They need silver for strategic industries. They need silver for defense. But citizens are buying it. Investors are accumulating it. Wealth is flowing out of currency into physical metal. And governments have 2 choices. Let the market run and watch silver go to $100, $200, $500, and see currency confidence collapse. Or lock down access, control supply, restrict ownership, and manage the transition on their terms. They are choosing control. And they are doing it quietly. Because dramatic announcements cause panic. Better to implement restrictions gradually. Better to condition the public slowly. Better to have infrastructure in place before crisis forces hasty action. That is why South Korean banks stopped selling silver on Valentine's Day. That is why China reclassified precious metals as high risk. That is why dealer accounts are getting closed and import flows are slowing. This is not random, this is coordinated. This is the global silver freeze and it is accelerating. What this means right now, I am not telling you to panic. I am telling you to recognize what stage we are in. Stage 2, complete surveillance active, institutions pressured. Stage 3, beginning purchase limits spreading, controls activating. Stage 4, visible dealers struggling, supply chains choking. Now the window is closing. Not theoretical, literally. Every month, fewer dealers, higher premiums, longer wait times, more restrictions, and once Stage 5 activates, once emergency measures kick in, physical silver becomes unavailable at any price. Here's what you do. Buy physical now. Not ETFs, not mining stocks, not futures. Physical metal in your possession. Coins, bars, recognizable forms from major mints. American Silver Eagles, Canadian Maples, 100-ounce bars from known refiners. Liquidity matters when systems break. Store it yourself. Not in bank safety deposit boxes, not in third-party vaults. Somewhere you control. Somewhere no institution can freeze. Somewhere no government can access without your explicit consent. The entire point is removing counterparty risk. Do not reintroduce it through bad storage. Act before controls tighten. Right now you can still buy. Dealers are operating. Premiums are elevated but not insane. Wait 6 months, limits might exist. Wait 12 months, dealers might be shuttered. Wait 24 months, you might be stuck converting currency to metal through black markets at 2 times premiums or unable to convert at all. This is not financial advice. This is pattern recognition. 5-stage playbook: surveillance, institutional pressure, capital controls, supply chain choke points, emergency measures. I have shown you which stage we are in. I have shown you historical precedents. I have shown you why governments are doing this now. The silver freeze has begun. Access is being cut off quietly, gradually, systematically, and by the time mainstream media reports it, by the time the public realizes it, the window will be closed. Do not wait for confirmation. Do not wait for headlines. By then you are competing with millions of panicked buyers for vanishing supply. Go verify this yourself. Check your local dealers. Call banks. Ask about purchasing precious metals. See the restrictions firsthand. Read the new regulations. Track the policy changes. It is all public, all documented, and when you see it, you will understand this is not conspiracy. This is policy. Coordinated, international, accelerating. Subscribe, turn on notifications, because what comes next determines who prepared and who did not. The people who see the freeze early, who act before stage 5, they do not just survive, they thrive. The clock is ticking. Access is narrowing. The question is simple. Will you act while you still can, or wait until the window closes and wish you had not? Do not be everyone else.